welcome everybody to this session. I have had a lot of chart requests, so I'm going to do my best to get through everything. I'm still in Sydney, Australia. It's been a pretty tough week here for Sydney with the mass shooting last weekend. So I'm here for the winter in Europe, escaping the winter. And today I'm going to make 10 calls for what I see the charts are saying for next year, but there's a lot of general information, and then I will get on to as many of the requests as I've had as possible. We may not get much time to go through individual requests. Please wait until I've got through at least my top 10 before throwing requests at me. So I've got 49 slides to get through, so quite a lot of work and analysis has gone into this. I always make the disclaimer, there is no silver bullet. This session is educational. It's designed to help you learn and develop your skills. And the picture can and will change. And as Amber has said, if you want the slides, you have to stay to the end. The slides, it's important to me that you've at least heard the session rather than just taking the slides verbatim. And that especially applies to calls for 2026, because I will give a number of caveats as we go through. So if I say something like bullish, bearish, that's not an inducement to trade. In fact, my top 10 is not an inducement to make investments. It's just what the charts are saying currently. And as I say, the picture will change. This session comes with CPD points from the Treasury Markets Association in Hong Kong. Our own courses are CPD certified with a CPD certification, and those attract 12 CPD points, which is more than a third of what most European bodies require people to have for a year. So quite a significant help there if you're needing to get your CPD points. It's an intensive technical analysis course, and what I'm doing here is just selecting modules for each month. And of course, this month is a double module. We did cloud charts last week, and this week we're looking at more specifically at technical analysis calls for 2026. All of the sessions that we have done are basically feeding through into this analysis. So hopefully you've come on this journey with me in 2025, and you'll continue on the journey with me in 2026. I'll give you the format for the next 12 months at the end of this presentation. And of course, all of these sessions are recorded and available at updated.co.uk/LSEG Masterclass. They go up at the end of today. They're freely available, and LSEG Academy records these sessions as well, so they are freely available for you to watch there. Ours go back to the beginning. LSEG, I think more just the last few months. But if you want to watch these sessions, quite key. But if you want the slides, you do have to stay to the end and request them. I'll only send the slides to people who request them in the list that I will get next week. Technical analysis is my life, and analyzing markets is what I do all the time for clients. I'm qualified. I think if you're listening to anyone who's giving technical analysis advice, ask them what are their qualifications. They might be experienced, but have they done the exams? I've done the CFT exams, the MSTA exams, and the MFT, which is the Masters in Financial Technical Analysis. So this is really my life, and I've taught it to hundreds of traders globally, and I'm a member of lots of different professional bodies where I teach, and of course giving the courses all the time is a key part of what I do. And I've taught technical analysis in over 30 countries. Last week I was teaching a team of commodity traders down in Melbourne. I got an email from them the next day saying thanks very much for the course, real tangible focus for our business strategies. I get great feedback, and I will come to you anywhere in the world And I write travel books as a hobby. So I'm always happy. I've been to over 100 countries, and I'm always happy to visit a new country. So face-to-face versus online is a big part of what we see as a trend in 2026. More and more firms are doing our online course, which is a 12-hour course, and then having me in for a day face-to-face or with a webinar, but face-to-face to then go through practically what they've learned and applying it exactly to their market. So I see that as a trend for 2026. Do contact me or go to the updated.co.uk/training part of the website. You can download our brochure there. Do contact me if you feel that a full course would be a benefit to you. And as I say, the course is 12 hours, 600 slides, and this is the key point of what we do. And I cherry pick a subject each month out of 100 different topics. I cherry pick just one topic and focus on that. But of course, when we're doing the course, we're building, and I will give you the 12 subjects for next year at the end of this session. So thinking about predicting for 2026, just to demonstrate to you that there is a methodology. This is not just like I'm just pie in the sky pulling out my thoughts and saying, this is what I think. This is proper analysis. So we're looking at things like, what are the time horizon of the charts, the position within the very long-term cycles that we're seeing in the markets, the existing trend through 2026 and at the end of the year, key price levels, resistance and support that are going to matter, price targets and patterns, and knowing when the call may have changed. So the analysis takes work. It's not just, no sort of shortcut here. This is, hard work to produce this. So today I'm going to cover government bonds, stocks, indices, and major stocks. I'm going to look at a few of the stocks that people have requested, and look at the currency market, FX, and then commodities, and then last of all, precious metals and crypto. And as I mentioned, I've had dozens of chart requests. So, this is really me giving you what I see as the big themes for next year, and then we'll look at your requests amongst that as well. And I cover these in this order for a reason. And I think the key thing, first of all, is time horizon. You remember this was the very first session we did in LSEG back in April. Time horizon, if we're thinking a year ahead, we're thinking months ahead, and we are looking at weekly charts predominantly today. We may even consider the monthly charts just for where we are within these very long-term trends, and we might look at daily charts just to think about where we are to the start of the year. But this table, months ahead, really means we're mostly looking at weekly charts for the calls that people want me to cover. And so this is one of my favorite diagrams. This was something we learned back in the 1980s when I was first starting. We were looking at long-term market cycles, and these cycles can go on for decades. And so the idea behind this cycle was that bond markets would be the first to turn. Then you would find stocks turning, and this could be years later, and then the economic activity would turn. Commodities would meanwhile be rising, and then them turning, and last of all to turn was precious metals. And precious metals could be booming while these other markets are forming. So, the question is, where are we on this roadmap? And bearing in mind these are the super cycles, but it's understanding how we fit into these super cycles, and I've taken those into account for making these predictions. So first of all, thinking about bond markets, here we see a 40-year, 50-year chart. This is a monthly chart, so it's a very long-term chart of the US 10-year. This is a 30-year yield. And you can see we had a very, very clear trend in bond markets, which broke around 2022. And Roger Bootle, a famous UK economist, wrote a book called The Death of Inflation. And I like to call this the death of inflation, because we have started to see a new trend developing, a very long-term trend in bond yields. And this is the 30-year trend. You'll recognize this ascending triangle here. And the real risk is if we break this 5% level on the 30-year, then that's the uptrend starting to gather pace. So bond markets actually have been effectively broken this trend that we saw to interest rates trending to zero. That has changed, and there are some very big targets, and I use the price targets a lot. But 5% on the 30-year is going to be a really critical number to watch through the year. Looking at the other end of the cycles, precious metals, and anyone who follows me on LinkedIn will see seen some of these posts. And here I've said, what would happen? This is a log scale chart of gold going back into the 1960s. The 70s, we saw gold just absolutely rocket. And if we did that all over again in that sort of inflationary environment where bonds were actually, we saw bond yields rising sharply. We had, interest rates into the teens. If we see something like this, the 70s all over again, and that's why we've got a big if here. And again, what would the price be in 2032? So it's a very long-term cycle. And just overlaying this, now getting going. I'm not saying that gold is going to $27,000, but that's the sort of scale of that increase in precious metals. And it is worth noting that on that way, we did have a retracement some 35% back. So, this is not a straight line by any means, but we are seeing gold really looking very strong indeed. So at one end of the spectrum, we've got bond yields rising, potentially long-term, and we've got precious metals also rising. Bond yields rising, of course, means the bond market, bonds falling because of the coupon factor there. So that's pretty consistent with that cycle diagram that we looked at. So prediction is all about probabilities for me. So when I'm doing this analysis, here's a chart of the dollar index, for example. I'm looking at this chart, the dollar index. It's a weekly chart, and I'm saying, okay, so we're seeing this quite wide trend breaking. We're seeing key levels breaking on the dollar index. This 100 level is really a critical level. Is it likely that we're going to recover and go back to the top of this downtrend? The trend is your friend, remember? So we've got a fair wind behind us that's pushing the dollar lower. Will we go sideways or will we continue down in the trend? And these levels are really quite key. Now, it's easier to project the trend for 2026 than it is for me to sit here and say exactly where we will be at the end of 2026. And no doubt we will do this session at the end of next year. We'll look back over these 10 calls and we'll see that some of them have worked out and others have not. But the ideal thing about technical analysis is we will know through the year when those calls have changed. And these key levels are going to really be quite critical. Now, we'll come back to currencies when we look at it. I rely very heavily on pattern. It was one of the sessions that we did in the year. And, here we see the dollar index where we've had this move through the pattern and then we go sideways. And this move, if we break to new lows on the dollar index, is around 96, let's say 96 and a bit. If we break below that level, then the move into the pattern, the sideways pattern, and then the move out of the pattern would be bad for the dollar. Now, the key thing is this may not happen within 2026. We may go on for longer in this sideways consolidation. But if we do break that 96 level, then we can expect to see the move lower. So it may not happen in time, and that's a key thing to remember, these price levels and the pattern, and I will give these levels when we go through. I rely very heavily on price targets. These are price targets that are developed based on point and figure charts. They're on Bloomberg, they're on TradingView, and hopefully they will be available on LSEG in 2026. They're rules-based. You just press a key, it puts the price targets on, and they are being added to more and more platforms all the time. And so I rely very heavily on the targets to make my calls. And again, if you follow me on LinkedIn, you will see me using those. So knowing when a call is wrong, that's going to be a key aspect throughout the year. And we see here this this 100-point mark on the dollar index is really quite critical. What was support is now resistance. Quite likely that's going to maintain a level of resistance there. But as I mentioned, this fall through sort of 96, this is a weekly chart, this fall through 96 would be very significant. Now the picture can change. If we go back above 100, then the dollar is potentially going to go higher in the year. Maybe go higher before it then goes back below 100 and go lower. But the beauty of technical analysis is we know from the key levels, from the trend, from all of the charts, we know when the picture has changed. We see it change here first before we get a reading on the fundamentals. So I think it's really quite important to remember that the technicals will tell you that. How do we know when the call is wrong? Another key factor, again, I'm just pulling out slides that we've covered this year through the year in the masterclasses. Another key factor is what pattern are we in? Are we going to make a continuation or a reversal? So are we seeing a top with a lower high, lower low, or a bottom with a higher low, higher high? And that's a factor that we're going to take into account when we start to look at some of the markets as well. So my 10 big calls for 2026, and I must stress that the picture can change and often will change. So that is a very key, important aspect of this. So my 10 calls. So the first big call is that US bond markets will break and go higher. Now we are seeing interest rates being cut. They were cut in the UK this week. They were cut in the US as well this month. So we are seeing rates being cut. But the interesting thing is that the long-term charts for bond markets are actually not for rates to go lower, but them for to go higher. So there's a really interesting situation there where we're seeing rates lower, but bond yields potentially going higher. The interesting thing here is we've got a symmetrical triangle. This means that something has to happen, and it almost implies that it has to happen in 2026 because these lines are trending to a point, they're converging to a point in October. So this is going to be an interesting one to see if we break this. At the moment, we're in a sideways consolidation phase, which is narrowing, and we are seeing the move into the pattern. Normally, we'd expect to see a move out of the pattern, the same direction we came in. It may not happen in time by the end of 2026, but as I mentioned here, the clue is that we are tending to a point. So it does imply that bond yields will break, and I think from this chart they should break higher. Now there is a risk that they break lower. We'll give you the levels shortly, but the key point here is that bond markets are looking strong. This is the 10-year yield. The 30-year yield is more of an ascending triangle, as we saw, so that's even more bullish. So 30-year yields are looking like they'll break higher even more so. So bond yields, key points are here that 4.2, 4.6, and 4.8 are the levels, and 5. So we see bond yields breaking through these levels, 4.2, 4.6, 4.8, 5. That's quite key. The downside levels to watch are 4 and 3.6. If we break below those levels, then it does imply that this move to higher yields may not happen, and we may see moves lower before we ultimately see moves higher. But we cannot ignore that 50-year chart and that 40-year trend, which was crystal clear. 30-year, a week or two above 5% on the 30-year. So that's why I like to say, we need to hold that level. So a week or two closing above 5 on the 30-year would also signal the long-term move is bond yields going higher. And I do have some quite scary upside targets. Those of you using my targets, will have, and watching me on LinkedIn, you will have seen those. I've got 33,000 followers on LinkedIn, so if you want to see what I'm saying each day there, do follow me. UK bond yields looking at new highs. The German bond yield also looking at new highs. I was asked to cover Sweden. That is actually looking at not so clear. So here, for example, is the Swedish bond yield. One of my clients in Sweden asked me to look at this, and you can see here this is actually pushing higher as well, but not as clear. We've seen the UK already breaking higher, Germany just about to, so that's quite key. And another one was India, less clear here. This is the Indian 10-year yield, and this has actually been falling from quite a high level where we've had Indian inflation. So this was at 7.6%, very different from Western yields. Japan has already broken higher, so we are seeing inflationary pressures there, bond yields going higher. Oz, the Australian bond yields also breaking higher, and as we just mentioned, India is more harder to call. So interestingly, Australia, which is where I am at the moment, interest rates were cut recently here. There already is talk that the Reserve Bank of Australia will actually raise rates going into next year, inflationary pressures as such, and we're seeing bond yields already going higher in Australia, so quite interesting there. But all eyes on the US. That's going to be the key thing to watch, these levels on bond yields. So the bond markets really look still like yields are going higher, bonds are going to fall into 2026. So that's the big one, and that will have implications for other markets, of course. So my second big call is that the Nasdaq 100 underperforms. Now, I'm reluctant to say it's going to collapse or that it's topped, but I do think we are seeing signs here of a lower high, potentially a lower low. So the potential for this lower high, lower low, the Dow theory coming through the cloud, a break below sort of 24,000 for the Nasdaq 100 would be bearish. Notice how we had a pretty poor start to 2025. I think we might be looking at something similar in 2026, and maybe not such a clear recovery as we saw in the second half of 2026. So Nasdaq underperforming. The Mag 7 is, of course, a very heavily weighted into the US stocks, into the Nasdaq 100. We look at the Mag 7 in a minute. But that is really quite key. And if we look at, basically the S&P 500, there's limitations on being able to look at that index. It's a charged index, so I tend to look at the S&P future. And here we are seeing also a lower high, and that weighting of tech stocks is really quite high. So that's going to be really interesting. So the key thing is, will falls in the Mag 7 outweigh some of the other US large caps? Will these other stocks manage to hold up? And certainly we're seeing stocks like Amex, Caterpillar, Goldman Sachs, Johnson & Johnson, JP Morgan, Walmart, all looking still quite strong, making new highs with good upside price targets. So that might be enough to rescue the S&P 500, but I think the Nasdaq is looking a little bit weak. The UK market is looking stronger. That's breaking into new highs. The DAX is currently ranging, and the Stock 600 is looking a bit better. And again, I was asked to cover the Swedish market. We can look at the Stock 600, that is breaking higher, so looking very different in Europe. And the German DAX is still not managing to break higher. So this is UK stocks, Scandinavian stocks, Swiss stocks, all sort of to pull that market up. So Germany not really looking as strong. And we see here we have cleared that previous resistance point on the OMX, the Stockholm index. So that's looking quite strong as well. So the big question is, will the market hold up with some improving breadth. And in fact, market breadth is the first session we're going to cover in the new year. So it'll be very interesting when we start looking at some of the breadth indices. So European indices looking a little bit better. Australian market is less clear. That's the all ordinaries. It is sort of pushing above the cloud and holding higher. This is the weekly chart, but yeah, so the trend is okay there. And if we look also, China's looking good, Japan's looking good, and India is also looking strong. So we are seeing a lot of these markets just testing new highs when the US is not. So it's going to be really interesting to see the extent to which US stocks markets will hold, and we have to watch out for contagion. So if we see that Nasdaq stock chart making new lows and then going into this kind of fall where we sort of fell 6,000 points, it's quite a sell-off. If we see this sell-off leading to a lower low in the S&P 500, and then starting to see some of the indices globally starting to underperform, you can be sure that if that we do see big falls in the US, it is going to affect global markets. So we've got to watch that for that, and so just watch out for the contagion there. Some of these markets are less correlated. We're looking at correlation as one of the sessions next year, but it's fair to say that Europe would certainly, Wall Street sneezes, London catches a cold, classic thing. If we do see big falls in the US, we are going to see falls in other indices. So the big one I do feel from looking at the chart is that Nvidia has topped, and I know there are a lot of Nvidia bulls still out there. A lot of people ask me about Nvidia, and just think we are moving below the cloud. We're doing that. The Nasdaq is not yet clearly below the cloud. This $170 level for Nvidia is pretty key. We need to get back above $210 for that call to change. And we are seeing potentially like a head and shoulders or a triple top pattern here. It is looking toppy. We had strong results out for Nvidia recently, and the price fell. So the market is expecting big surprises from Nvidia to push the price higher. So can Nvidia really massively surprised to the upside? Maybe this has just been as good as it gets. Nvidia may not see a new high in 2026, and I think, of course, if we are seeing a general feeling of tech stocks overvalued in the US, then Nvidia will fall. I'm not calling the end of the AI bubble. This is one of the charts I posted on LinkedIn recently. I like doing this with charts where I just took the market. I took the .com boom, if you like, from the Nasdaq, just shifted that chart and just said, what did Nasdaq look like versus where we are now? And we went considerably higher in the .com boom than we've gone in the AI boom. So this is where we went stratospheric, lots of failed companies. But I do like this saying, we tend to overestimate new technologies in the short term and underestimate. That should be, we overestimate them in the short term and we underestimate them in the long run. I made a mistake there. So that's the key thing. If you think about the internet, this was a bit of a fad at the time, but now the internet, it's hard to imagine life without it. So I'm not calling an end to the AI boom by any stretch, but I do think we are going to see some of the Mag 7 really overrated. And I did an exercise earlier today where I just went through all the charts and said, what's the best looking ones and what are the worst looking ones? And this is the list. And I have no view on these stocks. It's just what the charts are saying. Alphabet looking strong. Tesla is breaking to new highs now. So that was looking weak, but is now looking strong. Apple's still holding its trend and looking strong. Amazon less so. Meta less so. Microsoft, we're making a lower high, potentially lower low. So struggling to make new highs there, and Nvidia the same. So mostly based on price targets, and I had variations on these price targets. And again, if you're using updated Bloomberg or TradingView, you can just hit the keys and see those targets for each of those stocks. But that's my ranking, and I did just recently do setting every stock to 100 at the start of the year. Google was the star performer, up 70%, and you can see here that Nvidia went from 50% up to 23% up. So really a big divergence there in the relative performance. So 2025 was generally not a great year for the Mag 7, and I don't feel that suddenly it's going to be a great year for 2026 based on the charts. As I mentioned, Google looking probably the strongest there. So far we've had 3 calls. US bond yields higher, US dollar now lower, and I said basically US stocks looking a little bit lower. Remembering those big cycles we talked about, bond markets struggle first. If we see bond yields going higher, that is going to have an impact on stocks. And so now we're looking at currencies. And we're seeing here the dollar index. I've already talked about this. Looking like the downtrend in the US dollars would continue, move lower, pattern sideways. When will we see a move higher? And basically, key levels here for the dollar index above 100. That changes things. We're seeing a recovery in the dollar. Below 46, 96. Below 96, we're breaking the range, and that would push us lower. Euro dollar, watch this 190, 120 level. We break above 190. That's not necessarily euro strength, it's dollar weakness. We break above 120, then we are seeing again dollar weakness. The dollar index is very heavily weighted towards the euro dollar, so there's no surprises here that this chart is very driven by the inverse of the dollar index. So the key thing here is if we break 120, very big psychologically important level, that's going to mean falling dollar, rising euro, but actually it's more about the falling dollar. Japan is relatively neutral, looking at the Japanese yen. Sterling is pretty neutral as well. That's weak generally, but so is the dollar. The Swiss franc looking very, very strong. Some very big targets on the Swiss franc. Currently we're sitting around 80. So Swiss franc has gone over the years from $4 dollars. Buying Swiss franc. For a dollar buying 4 Swiss francs now buys only 80 Swiss centimes. So really quite a strong trend there. Indian rupee is weaker. So even though we are seeing a weak dollar, the dollar is still buying more Indian rupees, and so we're seeing 90 rupees to the dollar. So that is a weaker currency. And so that's really quite key. The targets are less clear on that chart. I was asked to cover the Swedish krona as well, again for this client, stronger against the US dollar and the euro, so that is a standout. Some of the Scandinavian currencies looking stronger. Aussie dollar is neutral, and the South African rand showing real strength here. So a dollar is buying less and less rand. This is a two-way street, if you like, driven by weaker dollar and stronger rand than gold currency strength showing through there. So 2026 is all about the US dollar. That's going to be the key thing. Is it going to break lower? And of course, that has really big implications for a lot of things like yields, US stocks, if that denomination in dollars is starting to hit global investors. There was a great article in The Economist several weeks ago talking about how many people are invested in the Mag 7 globally. If you're seeing the dollar deterioration for funds, that's going to be a factor as well. So there's a lot of drivers here that are pushing lower. Now we're thinking about commodities. So my fifth call is that we will see crude oil weakness. And one of my favorite things that I like to say, and I was training an oil trading team several weeks ago in Portugal, oil and gas traders, and I traded the biggest oil company in the world. I've trained their trading team as well. And one of the things I like to say is, if I told you in 2020 that there was going to be a war in Europe, between Russia and that was going to be on Europe's doorstep. Russian oil was going to be embargoed. There was going to be a long-standing war there. There's going to be a long-standing war in the Middle East, in Israel. We're going to see crisis in the Middle East. We're going to see Russian oil embargoed. We're going to see cargo ships or oil tankers taken, hijacked. If I'd said all these things to you, what would have you said the price of oil would be? So, most people would have said $150, $200. At that time, around $100. And it even shows that if you knew all of the things that were going to happen, all the macro events, even if you were armed with all that information, the fact is, it wouldn't have stood you in good stead. If you knew all that information, you might have been tempted to buy out of the money options in crude oil at $160 or something, thinking that they were going to come in the money and you're going to make a fortune. Well, the interesting thing is that actually the price has just been falling. Now, this might be about global demand, whatever reason you want to say, but the key thing is the trend is lower. We're below the weekly cloud, long-term trend bearish. We have just been below $60 on Brent crude. So that's really quite key. We've recovered a little bit, but we're seeing with each recovery, we then lurch lower. That $70 break was absolutely critical. We've talked about that when we talked about in one of the sessions earlier this year about support becoming resistance. The buyers at 70 are now happy to get their money back at 70 resistance. The key point here is we've got very bearish patterns. We've got a bearish trend, potentially a big descending triangle. So you could just take the height of the triangle and project that lower. Or it's a move into a sideways consolidation and then a move out of a sideways consolidation. But I think a reasonable target for crude oil by the end of 2026 is $50, so $10 lower, maybe even into the 40s if we see capitulation. Now, people will come to say all the reasons behind that, but that's just what the chart's saying. So very bearish on crude oil, and that's a call I'm confident about. Looking at global gas markets, I analyze crude oil, US gas, Dutch gas and UK gas, and carbon and power. I analyze it every morning for clients, so I'm doing that all the time. So I watch these markets much more closely. In terms of my training courses, I would say nearly half my training courses are in energy trading teams globally. Although I would happily go and train funds, or last week it was soft commodity traders in a particular soft commodity, and I've done grain traders, could be anything. But this is a market I do follow closely. And this LNG price, which is a sort of the global benchmark, this is Japan, North Korea marker. We've had a big down week last week. We're seeing that breaking lower. And again, if you've watched me on LinkedIn, this has activated a new big downside target for LNG. The long-term downtrend, the lagging line has not got above the cloud significantly, and we look more like we're heading to the base trend than the high. So that we've got a big range here in LNG between $8 and $16. And for the moment, looks like we're testing the bottom of that range. So oil weakness, gas weakness. Looking at global energy markets, crude oil weakness, LNG is weak. US nat gas is a bit better. That's more volatile. And European gas is weak. TTF, whether you're looking at the front month, the seasons, MBP, they're all similar. And again, I had requests to cover those markets. And let me just check my charts here. Yeah, so this one is TTF. We're waiting this morning to see if we have a little double bottom here and we can recover, but that's really fallen away. We gave clients targets into the 20s when we were above 30. And if we look at some of the other products, so this is summer gas in the UK, looking a little bit better than the front month TTF, pushing to new highs. Of course, this is not really going to be a call for the year because this contract's going to run out. But the big question for gas markets in Europe is, are we going to have a cold winter? And I guess the war in Ukraine is going to be another factor. So that's quite key. If we go back to just looking at gas markets that are weak, new lows, of course, would be weak. Carbon, on the other hand, is making 2-year highs. We've just rolled the annual contract, the CAL, rolled into a new contract, but carbon markets are looking strong. Again, I do training with carbon traders, and I call it every day, every morning, and that's been progressively, we've been calling it higher and higher and higher because the trend is up. And European and UK pound markets are generally weak. So again, if we go into those markets, first of all, so this is actually UK power. It's a seasonal market. There's a big jump there in the seasonal contract, but it is bearish below the cloud. So we're seeing a general move lower. German power, which is much easier to chart. This is the EEX calendar contract, finding some support, but again, that is breaking lower. We see, so that's just really the energy mix. And as I mentioned, we're seeing power markets are generally weak. So the key thing about these markets is that in recovery, there's a lot of resistance to fight. So they're generally weak. The exception is carbon, because that's trending higher and it's making new highs. So there's no resistance for it to fight. So that's the key thing, is all the way up these markets have got resistance to fight. So any recovery, we've got the previous levels of what was resistance now to get through. So that's why recoveries can really take a long time. So that's it in terms of energy. And this is a poll I ran again this week. I ran it 2 weeks ago. And we were at a higher level, and a similar percentage said we wouldn't go any lower, but we have gone lower. Around half the market thinks 25 is the floor for Dutch gas. My concern is there's not enough bears. So it's only when everyone's bearish that there are no new bears left to come in the market. So there's still enough people still to turn bearish, and we will watch that. But that's sort of counterintuitive. But whilst there's a lot of people thinking at a bottom, there is still room for it to turn. So commodities is a really mixed picture, and we'll look at those commodities in a minute, but my more speculative call is that I think we're going to see a recovery in lithium in 2026. So this is the more speculative call. I have to declare an interest. I've got a stock that's heavily involved in lithium exploration, and I do, that investment is based on this idea that we will see a recovery here. So watching for recovery in lithium is going to be quite key. So that's a speculative call. It's not heavily traded, but we are just seeing it coming off the floor. So that's quite key. So commodities is a mixed picture. We're seeing energy weak, metals, aluminium, zinc, and copper are looking strong in the charts. Nickel and lead are looking weak. So we're seeing a mixed picture there. And I've got targets on each of these stocks as well, on each of these commodities as well. Grains are generally weak. We are seeing corn turning, so that's quite key. And other softs, we've got coffee, cattle looking strong, cocoa looking weak. And I was asked to cover cocoa, and if we look at the cocoa charts, we can see here it's really, that was the weekly chart where cocoa rocketed, and then it fell back, made a lower high, and then a lower low, and that is a weakness where we didn't hold that previous buying level. So cocoa long term is looking weak. If I looked at the daily chart on cocoa, we can see that trend is really clear below the cloud. I'm just pulling the data in here from Refinitiv. And so we are testing the cloud all the way down. The lagging line hasn't been there. So we had a very weak year in cocoa, too soon to call a bottom there. So that's really the call. Shipping, not clear, long-term trend. Cobalt is up 2.5 times in 2025. So that's really quite a sort of lead indicator for battery metals, partly driving my ideas on lithium. The inflation picture may change things, of course, and remembering that commodities can be rising while stocks and other things falling. If we see inflationary pressures, then we start to see those filtering through to commodities. So a mixed picture. My eighth call is gold run will continue in 2026. It's a pretty certain call. We're not quite making new highs at the moment. We need to get above $4,400. And silver, number 9 call, will go even higher. That has broken out. This is the weekly chart. This is the break. So gold is still in this little consolidation. Silver in recent weeks has broken through. And if we look at the charts, we see gold just not quite breaking those new highs. 4,400 is the key there. We've got big upside targets for gold, though. Long-term targets much, much higher. Silver is already doing it. That was more of an ascending triangle, and that's broken higher. So silver is leading, and that's quite key. I was asked to look at a couple of stocks just while we're here. This one is Lemonade. Again, I think the person who requested this is an updated user. Just press the T key on your system and you'll see 4 upside targets and some percentage higher. Stocks breaking to new highs, always good. This is the daily chart. It's trending up and good upside targets. This one is Moderna. This is the point about recoveries. So Moderna above 36 would be a bit better. That was where the previous level was. This is the daily chart. This is why recoveries can take a long time. So less clear. Much prefer stocks that are trending up. Recoveries can take a very long time to play through. 36 is a key level there on Moderna, whoever asked for that. My last call is, this one's interesting. This is silver versus gold. And here we see how silver has outperformed gold. This is the 100 level, so set back to the beginning of 2025. The relative chart of silver divided by gold normalized to 100. We saw silver went lower by 15%, and then suddenly went all the other way higher. Now, silver normally sort of outperforms gold anywhere between 0 and 100. Hasn't always been the case. If you go back to the longer term chart, you will see that actually silver underperformed gold, but for the moment it's a clear outperformer, which is why we're saying silver has already broken higher, possibly a good lead indicator for gold, but both of these charts looking very strong, which is my call. So my last call number 10, just looking at precious metals, gold, silver, unlikely to be a bubble. They've got strong upside targets. We've talked about bond yields going higher, dollar falling, stocks potentially, the risk on trade is, gold, and we are seeing gold, accumulation of gold and silver metal is really significant. Platinum doubled in 2025. That was a breakout. Still looks pretty good. Palladium, new highs medium term, but it's still a long-term recovery, so not quite as clear. But this does tie in with the idea of bond yields, stocks, and the dollar, and I think when you think about those cycles we talked about, that's going to be a theme. Precious metals higher in 2026. So my last call is Bitcoin, and I just looking at the chart again. I don't have a strong view on Bitcoin. But the weekly chart, these are targets of my own system. The weekly chart, we had upside targets potentially to 200,000, but we are now seeing, and this is the importance of the long-term trend and the shorter-term, medium-term trend. The medium-term trend, we had downside targets that have been met. That's bearish confirmation. And now we've got another target as low as 55,000 if we break to new lows. So this 80,000 level is quite key. Quite interesting when you look at some of the calls at the beginning of the year, some quite respected names saying, 170,000, 250,000, and some of the funds really predicting, huge numbers, and that hasn't come to pass. No doubt there will be people saying that 2026 Bitcoin will go to these sorts of numbers. We do have strong upside targets long term, but we may have to go lower, and those targets will be negated with new lows. So that target there will be negated if we move below the level at which the thrust has been given. So I'm going speculatively lower on Bitcoin. And my summary on that is bearish below 80,000. That would give us a target to 55,000. And I think it would be very hard for Bitcoin to recover to new highs in 2026 if that happens. So 80,000 is the critical level to watch. Of course, if we break to new highs above 130,000, it's about 126, but let's say 130,000, then we do have targets to near 200,000 on Bitcoin. But I would favor that first scenario over the second one. So a fall below 80k looks more likely. The medium-term bear trend. We've seen recent big waves of selling. Traders may be okay trading Bitcoin, but investors, I'm not sure. And there is potentially systematic risk here as well. So that's quite key. And if we look at the chart on Bitcoin, here we see that is a really clear bearish trend on the daily. We just made a new high, but really struggled to hold it, which is why I like 3 days. We really struggled to hold that level at 125,000. And then we broke this critical 107.50 level. That was the trading range. We broke that. We broke lower. 107,500 is a really clear support level broken, then became resistance. And then we broke 100,000, psychologically important. We've come back to test nearly 95. And so in the interim, we need to get above 95. But this low recently at just above 80 and then 85, where we saw closing levels, that's going to be really key to watch. And if we look at the 60-minute chart, this is much shorter term, of course, than what the times we're calling, but we are seeing real volatility in Bitcoin, real uncertainty. And so I feel that's a relatively safe call to call Bitcoin lower. So my top 10 calls for 2026 are bond yields higher by the year end. The NASDAQ 100 may have topped. I'll be watching for a fall through. I think it was that 24,000 level. We'll be watching fall through there. Nvidia weaker in 2026. I think the Mag 7 are generally weaker. Some tech stocks are not looking so bad. Cisco, IBM, they're looking okay. But the key point here is the Mag 7 are looking weaker, and I think Nvidia is probably the one that's looking weakest now, which is not what you would have expected based on all the news flow you're hearing on Nvidia. May still produce great results, but the market is losing patience, or losing, if you like, losing its shine on Nvidia. The US dollar fall, I think that will continue, especially if we break 96 on the dollar index. If we break 119, 120 on the euro to the upside, that's going to mean weaker dollar. Crude oil lower, that's a call I'm very, very confident about. Global gas remains weak. We may see a recovery in European gas and even US gas. So a lot will depend on how cold the winter is in Europe and the US. And of course, how low stocks fall. The seasonality is such that normally we see low points more at the beginning of the spring than now. So I think there's scope to go lower. We've got to watch it, of course, and I'm monitoring it every day for clients. Lithium is a speculative call higher. That's, if you like, the speculative one. Gold run continues. Silver runs higher. And Bitcoin collapses below 80k. So those are my 10 big calls for 2026, and I've said here at least one call is likely to be wrong, and the picture can change. So I've got time to do just a few requests if anyone wants to throw any in the chat, but I'm literally probably just one or two if there's any requests, and I don't think we've had any come through, which suits me fine because we covered quite a lot today. And you can always email me, david@updater.co.uk, and I'll happily have a look at any chart for you. So at 2026, I did have over 24 requests by email for me to cover today, which I've largely covered. So it's always good to email me ahead of the schedule, and I'll do some work saving me to run around the system trying to find codes and that sort of thing. So I always look at chart requests, and all of these charts that we looked at were all based on chart requests that I received in advance. So that's quite a good thing. It's hard to cover all of this in an hour, and I will quite often go into a fund for a whole day where we will look at a whole long list of things. And if you want me to come and do that with you, I'm very, very happy to do it. So our schedule for 2026, we're going to look at market breadth in January. That's going to be a really key one. That's our third Friday of January. Then dealing with the liquid markets, correlation, relative strength, log scale charts, Fibonacci retracements, moving averages, volatility, Bollinger Bands, Dungeon and Keltner channel, MACD, and point and figure charts, which is a huge favorite of mine. We're going to try and cover that at the end of the year. So I'm just cherry picking out 12 subjects out of our intensive 2-day training course to deliver to you across the next year. So across the course of maybe a few years, we might get through the full training course for free. But if you want to cover it in 2 days or do it online in your own time, then let me know. You can just go to updated.co.uk/training. Remember to stay to the end to get the slide pack. If you do want to know more about our training course, this time of year, people around Christmas or New Year's resolutions want to up their skills, you can download our training brochure here, talk to your training department or your head of training about getting an in-house course. It's a really good way to brush up your skills. If you want to do it individually, we do offer a discount code. You can go to training, you can put in the discount code LSEG25 off. We've extended that for a few more weeks, so you can do that over the course of the break. If you want to do it, I really do recommend it. What I cover here will make so much more sense if you've done the technical analysis course. And that leaves me, last of all, just to wish everybody a happy holidays and a successful 2026. I hope that you and your families all stay safe over the break. And the next session will be in the new year on the 16th of January. Asia, this session will be 2 p.m. again, Singapore time. That's 6 a.m. in London, 6 a.m. in London, 7 a.m. in Europe. Or you can do the 10 a.m. New York time, which is 3 p.m. in the UK or 4 p.m. in Europe. Note the daylight saving, there's a slight change. Remember that hindsight is a wonderful thing. Foresight is better. I try to give you some foresight into what's going to happen in 2026. It's based on strong analysis. Take me a good couple of days just to do all the analytical work to deliver you those calls. Hopefully it's of value to you and sets you up. So yeah, that's it. And I'm happy to email me at any time, david@updated.co.uk. I will get the list of people who want the slides next week, and I will email you the slides if you stay and request them at the end.